Good morning, everybody. Hey, welcome to Friday, September 22nd. Hope you're doing well. Hey, it was not a good day yesterday on Wall Street. We continue to see further declines across all the indexes. We'll talk about that in just a few minutes as we join Doug on the radio as Dave's taking the day off. So, hey, looking forward to that. We'll talk about that more when Dave joins us or Doug joins us just a minute. And don't forget, though, that there are so many things that you and we have no control over, but you can control the amount of risk you have in your portfolio. You need to first know how much risk you have in your portfolio. Then you need to know how much risk you should have in your portfolio based on your age, how long you have to retire, and your risk tolerance. That's exactly why we created the Core Retirement Design. Give us a call, 863-382-0037 to schedule your core retirement analysis. Hey, with that, be on the radio here in just a second. Stand by.
7 Light FM, playing all your light favorites. There's the Black Eyed Peas, and I got a feeling it's Doug Reese sitting in for Morning Dave here on your Friday morning. It's 8:39 now, that time of the morning where we check in with our good friend Phillip Statler from Statler Financial Services. He can give us an update on what's going on with the financial markets as we end the week here on a Friday. Hey, Phillip, how are you today?
Hey, good morning, Doug. Hey, glad to be back talking with you. It's been a little while, but
yeah, it has.
You know, Dave deserves a day off every now and then.
Yeah, we'll give him a day off every now and then. We'll let him have a 3-day weekend.
All right, so let's start out with what happened yesterday. It was a dismal day yesterday on Wall Street. We saw the S&P 500 down a little over 1.6%. That's $72. Dow Jones Industrial 30 down almost 1.1%, down $370. And the NASDAQ, the big winner, down 1.82%. That was $245. It was just a train wreck after, we saw interest rates actually hold their own on Wednesday. Mm-hmm. You would have anticipated that things kind of level off. But like we said yesterday, that, they chose to put some language in there that the markets just don't like. And that was that they anticipate that they're going to hold interest rates high for a longer period of time, which the markets don't really appreciate. We look at that and say, I was actually reading an article, and the interest rates we have right now are at a 22-year high. It's been 22 years since we've seen interest rates this high in our country. And so that ultimately is going to continue to slow down our economy. And we'll see those results down the road. Not much. I mean, we're almost to the end of the third quarter. So pretty much all the name brands, companies that we recognize, most of them have pretty much reported their earnings by now. And so we're just seeing downgrades and upgrades. And even on the economic front, there's not much coming out, nothing coming out today. Now, yesterday, after Dave and I got off the air, there was one thing that came out, and that was the existing home sales. And existing home sales came in a little less than expected for August. And so, you wrap that up with the other things we had when it came to real estate. We are seeing real estate slow down, even here in Central Florida, even here in Highlands County, depending on the price point, depends upon whether it's moving or not moving. I would say anything over 350, 325, 350 doesn't seem to be moving as fast as things that are, under 250. I know in my neighborhood, there's 3 or 4 houses that have been on the market now for probably 4 months, maybe 5 months, which last year we wouldn't have seen that, But I thought there's nothing really coming out today economically, but I thought I'd kind of look at the calendar for next week. And next week, we do have some things coming out that will be helpful or hurtful. The new home sales come out on Tuesday, as well as a consumer confidence number. Durable goods come out on Wednesday. Thursday is always jobs day, but we also have on Thursday, and this one's kind of important, we have the revision to the GDP, our gross domestic product. That will say how much we're growing as an economy. and last reading was 2.1%. So we want that number to stay pretty close to that number. Remember, if we have a negative GDP, then that means we are not growing. We are actually close to or could be moving into a recessionary period of time. And then Friday is going to be a huge day next week. Personal income comes out, personal spending comes out, the PCE index, which is one of the main indexes that the Fed looks at when it's gauging inflation. That's kind of their barometer. So a lot of stuff coming out next week that could move the markets as we head into October. So like I said, there's not much on the earnings front, but I do want to mention a couple upgrades, downgrades. We had Wayfair, the furniture provider that I'm pretty much all mail order, I believe. They were upgraded by Bernstein to a market perform from market underperform. And so they're getting a big boost today, up 3 3/4% this morning. John Deere down today. They were downgraded by a analyst from hold. From buy to hold, and so that's affecting them this morning. They're down about 0.7%. And then you've got Ralph Lauren. They got a new company that's Raymond James is starting to follow them and has an analyst that's tracking their progress, and they initiated their analysis as an overweight rating for this week. So they are actually trading up about 1.3%. So some upgrades, downgrades that will be affecting the market today as we head into the weekend. One of the things I saw yesterday, I didn't get a chance to talk to Dave about this, but when I was going to school, Doug, there was they taught us in finance and investment class this thing called modern portfolio theory, and to put it simply, it was that nice pie chart everybody sees, and you got allocations to different sectors, including the bond sector. And the whole theory behind it was that when stocks went up, bonds should go down, and when bonds go up, stocks should go down. There was an inverse relationship to those things, and I've kind of said since the last two bear markets, the two last major bear markets, 2000 and 2008, that just didn't work back then. And I actually was reading an article that yesterday that said that stocks and bonds are now similarly correlated, which is what I've been saying for a while. But I found that interesting because that just, people always feel like, well, I'm invested in bonds. It's, that's my safe investment. And well, based on this article, that's not true. And from the last two bear markets, that hasn't been true. We've seen bonds decline, not as much as stocks, but still a significant decline in their value. So I thought that was kind of an interesting tell-all for the markets as a whole. So we're heading in today.
So that 60-40 split doesn't work anymore.
That 60-40 split really did not work last year. I've read several articles that have really said that the 60-40 is now becoming more of a dinosaur and just doesn't seem to be holding true, which is another interesting thing to look at. So as we look at where we're heading today, it's we got a lot of green ink after a couple really bad red days. It's a matter of fact, everything is coming up green right now. The Dow Jones Industrial 30 is up a little over 0.1%, up $42. The S&P 500 is up 1/3, and the NASDAQ 100 is up a little over 0.6%. The Russell 2000 is up 0.3. So solid green numbers there if we can hold on to everything. On the other side, we're seeing silver bounce about 0.9%, gold 0.3, and then crude oil, Doug, back over 90, up 1 point, right at 1%. up $90.54 a barrel right now, which is that's just
I think I read something that said they're expecting to go back to up to $100 a barrel.
they're working on it. They are working hard
Yep.
at trying to get that thing up. In Europe today, it's kind of a mixed bag across the board. And then in Asia, we've got another mixed bag. The Nikkei took a pretty good beating yesterday, down another 0.5% today. Now in Japan, just like here in the United States and over in England, the UK, they had an interest rate yesterday discussion, and they decided to hold their interest rate steady as well. So some good news out of theirs. That the market's not necessarily liking it, but same type of thing. The Shanghai, China's index is up 1.5% this morning as we get ready to start this day. So, hey, as we close out, Doug, I want to remind folks that I know we haven't really started talking about this, but I thought I'd throw it out there this morning. Is, Statler Financial, we have a community event every year called a shred event, where we bring a shred truck in and provide that for our community to come and get their documents shredded. And it's coming up. Put this date on your calendar, and it'll be October 21st. It's a Saturday this year, and you'll be hearing more about that in the coming weeks. But I want to just give folks a heads up they can put on their calendar.
Okay.
Remember that there's a lot of things out there, Doug, that we cannot control in this world. However, risk is not one of them. But you can control the amount of risk that you have in your portfolio. You need to know what that risk is, and then you need to know how much risk you should have based on your current circumstances, when you're going to retire, what your risk tolerance is. All that wrapped up into why I developed the Core Retirement Design. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
All right, Phillip. Appreciate the update. I hope you have a great weekend. Dave will be back on Monday and to get the week started again. And we will talk to you again on Monday.
All right, man. Sounds good. I will be out. I actually have a conference next week. I will be out next week. So I'm leaving Dave running solo. If it wasn't on the West Coast, I probably could phone in. But that 3-hour time difference gets tough.
That's kind of early.
8:40 in the morning. Yeah.
All right.
Have a good one.
Well, have a good one. That's Phillip Statler from Statler Financial Services here on your Highlands Light FM.
Hey, folks, again, I want to thank you for joining us today. Please, please, please refer us to your friends. Hey, if you need help in any area of your financial journey, give us a call, 863-382-0037. Have a great day. I will talk to you guys soon. Take care.